Okay, we're going to do a quick update here. It is just about 5 p.m. New York time, December 6th, 2018. We're looking at the daily time frames. So overall, not much has changed as far as the consolidation that's been in place here for a couple of days. At the beginning of the day, though, I did send out a video today sort of addressing some concerns and some thoughts and questions that people have, asked my opinion on. I appreciate and I'm grateful for people willing to, just at least ask me what I think. And I share it from my perspective, right? I'm looking at the markets and, assessing the technical conditions the way that I prefer to trade. So again, this is just my opinion. So when we started off the day, we talked about the consolidation and the indecision candles that we've seen over the last few days. Obviously, yesterday was the market was closed because the stock market was closed to honor President Bush, his passing. So that, that didn't really have a big impact. But again, we're going to see days like this where, as a result of something like that, things are going to slow down. However, we do have a bullish candle. Now, even though I see some bullish momentum settling back into the euro dollar, I still think it's just a little bit too early to start picking sides. This could be the bottom temporarily. It could be the start of maybe a move back up here to about the 11600 level. It's possible. But there are a few things that I like to do when I trade something like this. The first thing I want to do is notice, where did all of this come from? What happened? Were there any key support levels that were broken? Did any failed trades or like this continuation breakout trade to the downside? Was it a head fake? Is it a solid support low? Can I find something a little bit further back? That kind of thing. So I want to do a deeper analysis when I find a trade like this, because it's very easy. And I know, because I did this in the first year of my trading career, I wasn't spending enough time stepping back and looking at the bigger picture. I would, for example, if this was a 1-hour time frame or a 30-minute chart or even a 15-minute chart, I would just look at the candle patterns here and completely disregard where support and resistance was on the larger time frames, and I would just get into trades. And very often I couldn't understand why they weren't working, and it was because often it was because I just didn't take a look at what was going on the larger time frame. That would have helped in most cases. So earlier, we have this low right here is August 15th. Now, I've been talking about August 15th for a long time. It was a key low, and you can see the effect that it had in the dollar and several other FX pairs. So originally, I had my support low here at August 15th low. And then we had that candle right here that closed below that low, and it looked like a possible continuation breakout trade. That's a strategy that I developed to the downside. But it never gave the entry. It's a signal, but it never gave the entry, because sometimes these trades will turn out to be head fakes like this. So I have I have 3 or 4, actually 4. The fourth one I use on the larger time frames, but I have 3 filters that I use when I see a signal candle like this to determine the possibility of a head fake. So we never went short when we saw that breakout a while back. That was at the beginning of November. That was November 12th. So at this point, it looks like things could be turning around. Again, it could be just temporary. We've got a lot of resistance to deal with on the way back up, but this is nevertheless a bullish candle. And things are starting to look like they might switch to the bullish side, right? Momentum, things like that. But I still prefer to identify the new price swings that start to develop with a new trend. So we've got an A low, a B high, and I wait to see where C is going to take place. That's down here at the 786 approximately. Now there are a couple of different ways. Some people like to trade off of the 786 or the 618, things like that. I very often, very often in a situation like this, if it still looks too choppy and it's still too hard for me to detect which direction it's going to go in, and I can see that we're in a downtrend or we've been in one, and it hasn't taken out, price has not taken out any key resistance levels just yet, then I'm going to wait. I still think that it could be a little bit range bound or choppy until, and I will know when I get into a breakout trade, and I said this earlier today, and I say this all the time, I'm looking for the meat or the middle of that trend. So a continuation breakout trade, a breakout usually occurs with some kind of economic data, some kind of event, something happens and causes price and the market to react to it. And then we get that close completed candle outside of that consolidation range. And then there's a trending move that develops afterwards. And that trend move that develops afterwards, that's what I'm targeting. That's what I want to trade. At that point, I can calculate a bigger piece of the move and profit to it. I know exactly where my take profit levels are. And I'm trading in the direction as the rest of the market is. I can confirm it with volume levels. I can confirm it with the breakout. I can confirm it with the news. I have a lot on my side. And at that point, what I've done is I've taken a trade and I've looked for the best opportunity where the reward to risk is more balanced in my favor. It's more likely to win because I've got more confirmation built into that trade. So right now, I don't have that. I don't have a continuation breakout trade. Now, obviously, some people will say, and they'll ask me, well, if you think it's going to take out the highs or if you think it's going to take out the lows, why not put a position on right now and trade to those levels? And I get it. Some people like to do that. I don't. It's just not the way that I do it. I tried in the beginning of my trading career, and it's sort of that mentality where it could work, and then again, it might not work. And if I find myself thinking that way, that's the minute I stop trading. It's just not making any sense to me at that point. I'm going to wait. I'm all about waiting for confirmation. So at this point, I don't have confirmation yet. This candle has not closed, completed for the day. Again, it looks a little bullish, but we're looking at these indecision type candles. And I'm not convinced that this one's going to go a whole lot further just yet. Now, I could change my opinion tomorrow at the close when we get a different candle pattern. Or we get another candle that's completed and gives us more information. But right now, I don't have enough information. So I'm not too sure that I'm going to be trading that much with the euro dollar. When I look at charts like this and I see the daily time frame looking like this, I'm going to say to myself in most cases, this is probably a time when I should trade or stay out of the markets and trade very less if I do it all. If I'm going to get into a trade, I'm going to use a very small stop because things aren't moving in the way that I prefer them to. It's very choppy. The market's really suspicious about some of the activity that's going on. And there's going to be small moves and then stalls. Small moves, stalls, retracements that are a little bit too deep, things like that. So I'm staying out of it. I'm not going to jump in and continue to use a 15 pip stop over and over and over again, testing to see if one of these trades is going to work. I'm either going to find a solidified, good, valid signal, or I'm not going to do it at all. Now, there's another trade over here on the pound dollar. This one's a little bit different. On the smaller time frames, we're getting more bullish confirmation, and that, of course, is going to develop first before the daily and the 4 hour starts to pick up, right? It's going to lag a little bit. It's going to take a little bit of time for that to take place and filter through here. But we're looking at the daily time frame here on the pound dollar, and things are a little bit different with this one. Here, if I tighten up the charts, we can clearly see that low right there, again, that's August 15th. This has been on my charts since August 15th. We've watched price bounce off of this level several times. And over the last few weeks, I've also mentioned that, when it gets choppy like this and it gets really close to support, but it really hasn't hit it or cleared, gone through it and then turned around and gone back up, I'm much more comfortable trading this than back up here and taking a guess at it. So here, over the last few days, we've seen price attempt to break below that August 15th low, and it hasn't. And on the smaller time frames, we are seeing some bullish momentum to the upside. We're, at this point, waiting for confirmation here on the daily time frame. It doesn't mean that I have to wait until I see it here on the daily charts before I get into a trade. It just means that I need to follow along. If I'm going to go long pound dollar on the 30-minute or 1 hour, I want to come back here and take a look at the daily time frame. And if these candles start closing while I'm in some of my positions, I want to make sure that things are confirming my expectations that price is going to go higher. So here we're looking at a bullish engulfing candle, sort of a Morningstar pattern, right? We're seeing the possibility of price rolling over to the positive side. It hasn't yet, but it possibly could. We can go to the 4 hour and then the 1 hour and the 30-minute are also showing bullish momentum. So it's possible. This is showing a lot more strength than what we see in the euro dollar. Now, I'm not saying that the euro dollar isn't going to go any higher. What I'm saying is between the two, this one looks a lot better. There's more information here. And I'm more likely to look at this one and find a trade, which I'm in, going long pound dollar. So this one looks like a better opportunity. And things are starting to become a little more clear. Now, tomorrow could change. We could see price move up for half the day and then drop and go right back down and close towards the lows by the time the market closes for trading for this week on Friday, tomorrow being Friday. So that's a possibility, but I need to have specific profit targets before I even get into a trade anyway. I need to know where am I going to trade it to. So the next one is the dollar yen. Dollar yen, I'd rather leave this one alone for a while. This one has moved to some of my expected targets, but it's taken about a day and a half to 2 days for some of these trades to pay off on the dollar yen, which tells me that we're moving in pretty tight, small ranges. So if I'm evaluating, where am I going to put my money? So I wrote an article a long time ago, and I bring it up every once in a while, and people question me what I really mean by it. And it was titled "The Time Value of Money." And when we're trading, what I'm considering and what I'm taking into consideration is if I'm going to put on my normal standard position, the amount of money that I put on a trade, I want to know, and I'm going to do my best to try and figure out if I'm going to get into a trade that could take a long time, and it's not moving and covering a greater distance where I could expect price to move more consistently and fluidly to that take profit target. As I mentioned, when I've traded the dollar yen over the last few weeks, it's taken a lot longer for it to reach its targets compared to the euro dollar or the pound dollar. So when I can see better price structure, here I see, this is the daily time frame for the dollar yen, I see a range of consolidation. I see a new A high and a B low. I don't know which direction it's going to go until a candle closes below that B low or above that B high. But the price structure and the tight range that it's moving in, I would rather focus in on this one. This is the pound dollar. This looks like it might give a better opportunity if it significantly bounces off of that support level and we get a bullish candle that closes today and then some follow through for Friday. That's a possibility. So I would rather put my money on a trade like this one, expecting that it's likely to go a little bit further, faster. It's going to cover a greater distance, as opposed to getting into a currency pair that's just going to meander and move around, and it's going to, I'm going to have to babysit it for 18, 19 hours, maybe 2 days, and then finally it hits a target of like 35 pips. That's a long time to wait and have your capital tied up into the market. I'd rather avoid trades like that and look for better opportunities. Very often I will time my trades right around the New York trading session because we get economic data. There's more participation, there's more volume, there's more traders online at that time. That's why I look for a lot of my trades to develop during the New York session. And I will specifically wait for those opportunities because I know it's more likely to move to its targets a lot faster than some of the others. So right now, I'm not really going to do anything with the dollar yen. I would prefer not to trade it until it reaches either this support level or this resistance. Now, again, that doesn't mean that I won't have a trade. It's just at this moment, with the data that I'm looking at this very moment, that's what I'm thinking, and that's what I would rather do right now with this one. I just don't have an opinion either way right now. And I wait for confirmation anyway. Even if I thought it was going to drop a lot lower, I would wait until that support low is taken out with a closed completed candle and some more indicator confirmation as well, along with some news. News is going to help move this around as well. So I get the advantage of doing that. So again, between these three, the majors, the euro dollar has stalled. It really isn't printing a strong candle, but it doesn't mean that tomorrow it won't. It certainly could. It could pick up that momentum. The dollar could drop a lot lower, and we could see things really start to pick up here in the euro dollar. But between the three that I just showed you, the one that I would select would be likely this one here, the pound dollar. It's showing a little more strength. Now, sometimes with these moves, if it is in a downtrend, we can still see a bullish signal candle, a pattern, and then yet it will still just drop straight back down. It doesn't have to go any higher. But I would wait for more confirmation to make sure that it's going to go a lot higher if I'm going to hold on to a trade, expecting some of these targets like the 1.2850 or the 1.2820, something like that. So that's what I'm going to be watching over the next few hours and after the rollover. As far as HL30s, I would be very careful. When I see consolidation that lasts quite a while, specifically here in the euro dollar, I stop trading the HL30s. I stay away from the HL30s when it's inside a consolidation because eventually those HL30s start to fail because price starts spiking higher or lower, and it pushes the support or resistance boundaries, and it can easily stop us out with that 20 pip stop. So I'd stay away from that as well. So again, I'm going to be trading most likely a lot less this week or the rest of the week. And I was actually thinking that this week was going to, that there was a chance that it could be a better week, meaning that we would get more trade signals. But it really hasn't happened that way. And then again, with the markets being closed, it slows things down. And the market is really suspicious. People are really suspicious about what's going on. They're very concerned. Everybody's waiting for the next move. Again, the Dow, staged a strong comeback at the end, but that doesn't necessarily mean that it's over with. I mean, we've seen false setups like that a lot, where people get caught thinking that because it stages such a strong comeback at the end or the last few hours that everything's over with, they've avoided danger, and then it'll turn around and just drop right down there a few days later. So we've got to be careful. We still have to be on the alert. We've got to be careful. We've got to be really selective about the trades that we get into. And again, the biggest advantage that you're going to have is knowing when to stay out of the markets. Preserving capital, keeping the powder dry, as they say, that is what has helped me. That skill is what has helped me stay in this business as long as I have, is knowing that conditions like this mean either stay out or be really, really specific about your trades and the ones that I execute. You've got to really pick those trades and work really hard at eliminating the ones that are tempting you or testing you when they don't line up according to your trading strategy.